Economics, Standard 12, Unit 7, International Economics continued. Let us learn today foreign direct investment and trade. Foreign direct investment is an important factor in global economy. Foreign trade and foreign direct investment (FDI) are closely related. In developing countries like India, foreign direct investment is the natural resource sector. For developing countries like India, it is the natural resource sector. So, for developing countries, foreign direct investment is the natural resource sector. Natural resource sector, including plantations, and also it helps or it increases trade volume of developing countries. FDI is useful to substitute foreign trade. It is useful to substitute foreign trade. Substitute foreign trade for developing countries. So, it is the natural resource sector for developing countries, and also it is useful to substitute foreign trade and regional integration schemes. FDI, foreign direct investment, is helpful to accelerate the economic growth. Accelerates the economic growth. The economic growth of a developing country. Not only it is the natural resource sector, it is also useful to substitute foreign trade, and also it is helpful or it is useful to accelerate the economic growth by facilitating essential inputs needed for carrying out development programs like capital goods, technical know-how, raw materials and other inputs, and even scarce consumer goods. So what is FDI, foreign direct investment? It is a direct investment into production. A direct investment into production or business in a country by an individual or company in another country. It can be either by buying a company in the target country or by expanding operations of an existing business in that country. So it just connects two different countries. So home country and host country. An investment becomes foreign investment when investment is done by citizens and government of one country, which we call it as home country. So one country, home country, and industries of another country, host country. So that is the investment is done into a production or business in a country by an individual or company in another country is known as foreign direct investment. FDI, foreign direct investment, refers to long-term participation by country A into country B. A long-term participation by country A into country B. So we can just take it as country A and country B. A long-term participation between two. And country A just called as home country and country B host country. So it receives, and here country A invests on the industries of country B. And also it usually involves participation in management and joint ventures transfer of technology and expertise. It corresponds to the investment made by a multinational enterprise in a foreign country. It corresponds to the investment made by a multinational enterprise in a foreign country. Remember, FDI, foreign direct investment, is different from foreign portfolio investment and foreign institutional investment. So we have to remember the other two investments which are different from foreign direct investment and that is foreign portfolio investment. First one, foreign portfolio investment. Portfolio investment, and the second, these two are different from foreign direct investment. Second, foreign institutional investment. So, foreign portfolio investment and foreign institutional investments are different from FDI or foreign direct investment. So what is foreign institutional investment or what is foreign portfolio investment? Foreign portfolio investment is, that is what we call it is, it means the entry of funds into a nation, where foreigners deposit money in a nation's bank. So foreigners deposit money in a nation's bank or make purchases in the stock and bond markets and sometimes for speculation. So it is a part of capital account of balance of payments. So foreign, that is what we call it as portfolio investment, is a part of capital account of balance of payments. And what is foreign institutional investment? It is an investment in hedge funds, insurance companies, pension funds and mutual funds. For example, a mutual fund in the United States can make investment in an India-based company, not India-based country, but India-based company. So a mutual fund in the United States can make investment in an India-based company, and that is called as foreign institutional investment. So foreign institutional investment and foreign portfolio investment are different from foreign direct investment. Now there are certain objectives of foreign direct investment. So what are those objectives? So the objectives of foreign direct investments are, the most important ones are, there are four important objectives of foreign direct investment or FDI. The first one is sales expansion. So objectives, first one is sales expansion. Second, so first, the most important one is sales expansion. Second, acquisition of resources. Acquisition of resources. And third, so sales expansion and second, acquisition of resources. Third, diversification. And fourth, minimization of competitive risk. So third, diversification, and fourth, minimization of competitive risk. Minimization of competitive risk. So these four are important objectives of foreign direct investment: sales expansion, acquisition of resources, diversification and minimization of competitive risk are the important objectives of foreign direct investment. Of course, there are advantages and disadvantages of foreign direct investment. There are many advantages. The income and employment of the host country increases by FDI. So FDI helps to increase the income and employment of the host country. And it also just brings out, that is, technology, transfer of technology to the recipient country, to the host country. And also it just brings revenue to the government of host country. The most important three advantages are just income and employment increases in the host country, and second point is technology, transfer of technology is also just brought to the host country, and third, it helps to increase the revenue of the government in the host country. And of course, let us learn the rest of the advantages and disadvantages of FDI or foreign direct investment in the next class.